Credit Suisse could be insolvent currently. This could be a global financial Lehman moment.
Bullish on sushi for now. Full disclosure, Hartmann Capital bought something to the tune of over $2 million worth of sushi. I'm a big believer that Ethereum will one day flip Bitcoin. There's never been such a no-brainer investment in my eyes.
There's a different layer to this thing called the Metaverse. There's a different side of it that has nothing to do with crypto.
Two of the most important things that happened in the last 6 months that nobody's talking about, nobody's seen, is that
it's been almost a year. When is this market going to catch a bid? And what's going to be the thing that allows it to do so?
Before we get into today's episode, a few quick disclaimers. All the information shared with you today is for educational purposes only. None of what we share today with you should be construed as investment advice, nor is this an offering in any of our investment products. Furthermore, some of the assets discussed on this show may be held whether long or short by either us or our guests. As always, remember, investing comes with risk, so make sure to do your own research. And now, back to the show.
What's going on, everyone? And welcome to our brand new show, Inside the War Room, where you can join us at Hartmann Capital here, where we go over everything that's been going on in the world of crypto, Metaverse, and beyond. And I'm joined in this show with no other than our most recent team member, Dan Jablonski, our new head of IR and business development, who will be joining me in the show to help cover all these areas and also bring some of your questions that you share with us, whether it's through email, LinkedIn, and so forth, to light and cover everything. How are you doing, Dan?
I'm great, Felix. How are you? Thanks for having me on today.
Of course. Maybe catch us up a bit with what do we want to talk about today and what you've been finding in your conversations this week with investors.
Yeah, so just like you mentioned, we're hoping to do a little bit of a different take here, where we put you in the interviewee seat now, and I ask you a few questions. And some of the things that I kind of want to ask you today, just to get inside your mind, and some of the things that you're looking at right now in the market and both in your own firm, are starting from the top down with like macro and what's going on in the world, what's going on in markets right now. Then I want to kind of transition that and dive into like what you're seeing and what you're looking at like within the hedge fund, within HDAF. And then that hopefully will lead into a discussion then back to like the private market side, and we can talk about some of the deals that you've been seeing across the Metaverse Fund and Hartmann Metaverse Ventures. And then finally, of course, like wrap it up and want to talk about just some cool high-level firm things, like what have we been up to the last 30 days?
A lot of travel.
What's going on? Just different current events and so forth. So with that, I think we can get started. We can talk about the market as a whole here, and a lot of macro and a lot of news headlines overarching this week and last week. It seems like there's a lot going on in the world right now, and so one of the things that we're hearing is a potential that Credit Suisse could be insolvent currently, and the potential that they could go under. And I know that throughout all of 2022 so far, people have been calling for a Lehman moment, and all of us that work in crypto, we thought that Lehman moment already happened in June when Three Arrows Capital went under, but this could be more of a global financial Lehman moment. So what's your take on that? What do you think? What have you heard? What have you read? What do you know about Credit Suisse and their potential insolvency?
Yeah, so first of all, to talk about that Lehman moment, over the last 6 months or so, I think most capital allocators have become very dovish when it comes to investments, meaning they're like heavy in cash. A lot of family offices we've been talking to said there are 40% cash, 80% cash, and so forth. And it seems like everybody is waiting for that Lehman moment, so to say.
Yeah.
But there's a line in the book, The Black Swan, by Nicholas Nassim Taleb, where he says, the black swan that everybody plans for is not the black swan that happens. And so it seems like everybody's so on a high alert because of what happened in 2008 that they think the same thing is going to happen again. Yeah. And the reality is things have been playing out so slowly. Of course, when you zoom out, yes, a lot of things have happened in fast progression, but really it's been multiple months now, which means a lot, whether it's banks or whether it's private allocators, have had a lot of time to kind of rebalance their portfolios, create cash cushions, pay down debts, and so forth. And so I personally am more on the bullish side right now, just because I see everybody fearful. There's been a really like historically high levels of how many puts have been bought, both in the crypto space and in the traditional equity space. And so I think people are pretty hedged. And so if anything, we probably have a relief rally before we have more downward pain. Doesn't mean that the pain is over, because there's bigger overarching issues going on with the strength of the dollar and the kind of havoc that it's causing on other nations, both on their currencies but also their economies.
Yeah, I love that. That's very well said. And I guess maybe just to press into a few things there, speaking with prospective investors for the last few months, of course, yes, they're maybe waiting for another leg down. What we saw recently was a relief rally in markets, and now things have once again dropped back down to summer levels. What do you think happens next? What do you think happens into Q4 here? And I know there's a lot of other macro factors which we'll touch about in a second. But what do you think happens next in Q4?
I'm just going to focus on the digital asset space, since that's what I spend all my time on.
Sure.
Of course, there's correlation. People always say, well, so far the last 8 months or so, crypto has had a correlation of 1 more or less with the S&P, and so the S&P leads big crypto followers. But at least over the last 3 months or so, we certainly have had some level of decoupling, where if you just look at the Ethereum chart and you look at the S&P just made a new low in the last week, whereas Ethereum is up something to the tune of 50%, 60% from its lows. It bottomed out at around 800. It's now at 1,350.
Yeah.
And so those are just significantly different charts. And there's also, a lot of these ecosystems, not all cryptos are created equally. There's a lot of stuff for shorting, but when it comes to the large caps like Ethereum holds no debt. Ethereum is almost deflationary on some days. So it's one of the assets that's actually harder than even the US dollar, right? And that's something I think people aren't thinking about enough, because yes, we have been a risk on asset. We have been selling off with the S&P, but at some point, if the dollar does start tapering off a little bit, when, for example, maybe the Fed gets pressure or the US gets pressure from other countries saying, hey, you have to ease a little bit, or at least stop the tightening, where do people go, right? I don't think they're going to go into another currency, because those even though they could regain some ground against the US dollar, they're not any stronger either. A lot of equities are ridden by debt, which is still a currency issue. And then last but not least, crypto's left over, something like Ethereum, which is the so to say the I don't want to say the equity, but the foundation of the new internet, which is the foundation of DeFi, NFT, stablecoins, which isn't going anywhere. All those have continued to have traction, and it is becoming more and more deflationary. And it is now also a revenue generating asset. So it checks all the boxes, where if you have a 5-year time horizon, I don't think from this point in time there will be any asset in the world that will perform better over that kind of long time horizon.
Yeah, absolutely. And a few things that you kind of hinted at and touched upon there. I mean, even Tuesday of this week, a few other headlines. The Australian Fed, they began to slow down their QT efforts, and even the UN this week, they warned the US Fed to slow down on the pace of rate hikes, because they're worried about how that could affect developing countries. Of course, under the assumption being that as the US dollar strengthens, these smaller countries will have a harder time being able to buy US exports. Maybe, of course, as how this does relate to digital assets, but touch into this and touch into kind of what QT has meant both already for crypto and what it will mean going forward into Q4 and into Q1 of next year.
Yeah. So it's really funny, because I think it was March of 2020. It's May 2nd, 2020. On our newsletter, I actually wrote an article called 2 Paths for Bitcoin. And so this was actually right after, maybe a month or so after Black Thursday. And I discussed the idea of the dollar wrecking ball, right? And so this was a theory that was already the dollar wrecking ball and also the dollar milkshake theory, were two theories that were making their rounds already 2 years ago, 3 years ago. Yeah. And so I kind of outlined, how, first of all, people always think of the devaluing dollar, which is true, of course, if you leave out the last few months. But the dollar has been singularly gaining strength against virtually any currency out there, right? So I had a graph in this original article where it said, the dollar rose against the British pound, the Japanese yen, the euro, the Russian ruble, the Chinese yuan, Canadian dollar, and Australian dollar, right? All of these lost something to the tune of 20 to 30% from 2003 to 2020.
Wow.
And the reason that's important is because, so if the dollar is getting stronger, now that it's getting even more stronger, right? This is judging by the DXY, all these currencies I just mentioned, they lost something to the tune of another 25% this year alone, excluding 2021 and so forth. And so why is it important? So in the article, I then go on to talk about euro dollar debt, right? So a euro dollar is pretty much a dollar that is held between two entities or sovereign nations outside the US, right? So for example, maybe the Germany owes US dollars to Japan, or maybe, Nigeria owes US dollars to France, right? Because now these are two non-US actors that owe US debt. And that's what gets problematic because, if, for example, a third world country holds, let's say a couple $1 billion in US debt. Yeah. Normally, sure, that's fine, right? Because then they know how much debt payments they have, they can service the debt and so forth. If all of a sudden their currency is getting devalued by 80% against the US dollar, that means that all of a sudden, their debt payments almost become 5 times as high. Wow. Right? And so that can wreak a lot of havoc on other countries, both third world countries, but also EU countries, because, for example, we saw how much the British pound fell off. And so anyway, so that's how we get into the dollar wrecking ball theory. And then in that article, I said there's 2 paths of Bitcoin, right? And funny enough, the first, let me see if it was the first. The first one played out for the last 2 years or so where, the dollar sold off, all assets rallied, right? But now is the opposite what's happening, where this dollar wrecking ball becomes really, really strong and it wrecks all assets around the world, where I even said like it could crush Bitcoin for time being. But the turning point then comes when other countries start having currency failures, when other economies start collapsing, they will need to go somewhere. Yeah. And now they really only have 2 choices. Dollars or Bitcoin, right? I mean, you can throw ETH into the max now as well because it's kind of like more and more sound money. But, if you live in a country, in the past we'd say like, Venezuela, Zimbabwe. Now we can say Britain. Sure. As crazy as it sounds, right? Yeah. If you live in Britain, your British pounds just lost 25% of their value against the dollar. A lot of like tech imports, tech companies are priced in US dollars. So your cost is going up, inflation is going up, and so forth. Where do you switch over to? Yes, you can go into US dollars. Some countries, of course, the UK is fine there, but other countries have currency controls. You can't even get US dollars that easily, right? But you can get Bitcoin. You can get ETH. Yeah. And so this is a part where I think this part of the arc that we're going to go into. We're not there yet, but I think we're slowly phasing into it because there's a graph and we can probably overlay it. Ms. Sari showed that in the last 2 weeks or so, more Bitcoins have been bought with euros and British pounds than ever in the history of Bitcoin, which shows that people are fleeing those currencies like euro and British pounds and they're going into digital assets. Absolutely. And so I think that's why also maybe this contributes to, why ETH looks so different from the S&P, right? And so as we're going into this arc now where, the initially dollar weakening, all assets rallied. Now the dollar gained strength, all assets crashed. But this dollar strengthening caused a lot of other currencies to fail. Now people are looking for an exit somewhere else. And so I think digital assets could be that. And we'll go into that later more, but obviously not all digital assets created equally, but I think the blue chips might have actually found their floor at this point.
Of course, and I wanted to add on to that as well too. I read an article, I believe it was actually the Blockworks article from 2 nights ago, that Lebanon recently had a run on the banks. And in Lebanon, you can open up accounts with US dollars or with the currency for Lebanon. Yeah. And in order to withdraw US dollars from your US dollar account in Lebanon, you only get 20 or 30 cents on the dollar back. And this already couples upon the fact that it is tougher in a lot of developing countries to buy Bitcoin, to buy digital assets and so forth.
And one thing to add too is that, if it's a self-custody wallet, that Bitcoin is actually yours. Now, if you hold US dollars in your Lebanese bank account, those US dollars are still not yours.
It's an IOU.
It can still be seized. And I think it might have been Lebanon, it might have been a different country, but I remember there was a news story maybe 3 weeks ago, where a woman actually tried to rob a bank to get her own money.
This was Lebanon.
Right, so that was Lebanon,
this is
right?
What happened in Lebanon.
She literally didn't try to steal anybody's money. She wanted to steal
just to get
her money.
Her own money.
Her own money.
Yeah, that she deposited in the bank.
Where she came in with like a fake gun.
And so that's a very bullish thesis for digital assets then, to act as a third party to counter all of this between the craziness of in Lebanon, right? Opening that bank account or opening a US denominated bank account and having to then rob a bank later on because you need your deposit back.
And I will say, like, this is, if you've ever watched The Big Short, that's one of those the just don't dance moments where it's like it will be one of the biggest moments for digital assets, but man, the world will be pretty screwed.
Yeah.
Where like a lot of pain has to happen for that event to play out. And I literally wrote about that, my article 2 years ago, where I said, that will be one of the biggest boons. I mean, let me see if I can actually find it, for the digital asset space, but it will cause a lot of damage for the world. But I think, whoever you're talking to, I said, this would be the most real sense of adoption and one of the most compelling paths to global adoption, albeit dark without a doubt, right? But that's kind of like the state of the world we are in right now. And there's, the chances of a beautiful deleveraging, as Ray Dalio puts it, I think is becoming weaker and weaker.
Sure.
Like somebody's going to get hurt.
Sure, absolutely. One of the things that we have kind of been talking about is these blue chip assets like Bitcoin, like ETH. But you're a fund manager, and you're not necessarily going to charge performance fees on just buying Bitcoin and ETH in your fund.
Stealing my sales pitch, yeah.
So our sales pitch. So and I guess. What are some of the things that you're looking at outside of these blue chips that are non-blue chip names? Like, what's happening in HDAF? What do you see? What do you like specifically for the hedge fund and specifically for your role as CIO?
Yeah. So I think the last few months have been really characterized by special situations more than anything else. And that's both on the long and the short side. We can talk about long shorts later, but in terms of special situations, something I always say that the crypto markets, they're like Teflon, right? Or like the pans where like nothing sticks to them. And it's always nothing sticks to them in the inverse, meaning in a bull market, you can say all the worst news in the world, people do not care. They will still market buy, right? Yeah. And the inverse is true in bear markets, where you can say the best news in the world, but people still sell it off, right? Yeah. And so we had some really incredible news in the last few months. You've had, Helium cover T-Mobile. Yep. Helium price didn't move much, right?
No.
You had Facebook announce they're using Flow blockchain, right? Flow went up for like a couple of days, gave it all back again, right?
Yeah.
So there was, and there was many more like that, where like big things happened, and you could almost every single time fade the trend, right? And so something that is, I think, has been really compelling is finding news events, and especially underwhelming news events, and simply betting against them.
And so I guess just to press into that, how do you find those news events? What do you use? What do you look at? Who do you talk to? Like, how do they come upon your radar when they first arrive?
Yeah, well, that's my trade secret. But no, joking aside, it's just a lot about, being tapped into what happens. Like, as silly as it sounds, a lot of times, like, things get broken on Twitter, right? And following the right people, having alerts on the right people. And so, for example, a couple of days ago, the Ripple case, had a new event happen where the courts decided that the SEC had to hand in a recording where one of the commissioners said that like ETH is not a security, right? It's a commodity. Yeah. And all of a sudden Ripple started going nuts, right? It went up, something to the tune, I think, from like the 30 cents to maybe the 50 cents. Yeah. And as people started realizing, it's a big deal, but it's not, doesn't mean that the case is won. The SEC could actually, appeal the decision and try to overturn it again. We decided to, for example, short against that event, right? And within a very short time, Ripple peaked around 54 cents and it went all the way back down to 41. And so like it gave back 22% in like less than a day. Yeah. And so these things keep happening. So that's something that, I found interesting to monitor even in like a very sideways market. Yeah. Beyond that, I think when there is a genuine catalyst that the community rallies behind, I think it makes sense putting both size behind and focus behind, right? So like the biggest catalyst in the last quarter was without a doubt the Ethereum merge. Yeah. Because like there was nothing going on in crypto maybe other than SushiSwap and all this. And so everybody piled in on ETH because like they're like, we're starved for alpha, we're starved for catalyst. So when there is a catalyst, it seems like the whole community comes together. And so clearly, ETH became one of the most crowded trades, which is why we saw a selling news event. It's one of the most important upgrades the crypto space has seen in the longest time.
Absolutely.
Because when's the last time you had a $200 billion project, which means the only other asset that ever touched that place is, Bitcoin. And to have such a massive like code upgrade where you go from proof of work to proof of stake without a hiccup, everything worked, everything's fine, it's going on, and now it's deflationary. If the gas fee is over 15 or 16 Gwei, it's deflationary, which in the bull market is pretty much every single day, every single minute. Yes. So it's going to be deflationary. It is ESG friendly. It is a revenue generating asset for stakers. It's a foundation of DeFi, NFTs, stable coins. there's never been such a no-brainer investment in my eyes. And again, no financial advice. You can totally fail, everything can happen, right? But at the end of the day, it's silly that Ethereum's trading at 2017 levels. And so,
And this is one of those build through the bear market key highlights and focal points that we're going to look back on maybe in 2 or 3 years from now and say, wow, like remember that event that really set the tone throughout that bear market.
And I'm a big believer that Ethereum will one day flip Bitcoin, and people will think, wow, that seems silly that people didn't buy Ethereum at $800 in 2022. But of course, ETH became kind of a crowded trade, and now I think it's just a long-term bet where like the merge happened. There's more upgrades coming. I think there's the Verge, the Surge, and the Splurge. There's like they all rhyme. But there's other interesting things starting to happen, and so that's kind of like what caught my attention the last few weeks is particularly Cosmos and SushiSwap.
I was just about to ask. So that that was a news event, was the merge, and so you were trading around that news event. Another news event actually happened yesterday with SushiSwap. And so tell me about this. Tell me about that one. Tell me about what you did as soon as you found out about it.
So SushiSwap is probably one of the crypto industry's most beloved babies because it was so organic from the perspective. It was a fork of a centralized project at the time. I mean, you can call Uniswap centralized, decentralized. At the time, there was no token. It was private company, ergo centralized at the time. And so, SushiSwap forked the code of Uniswap, the biggest decentralized exchange at the time. And it was run by Anons. The first Anon tried to rug, and then he apologized, came back. There was new leadership. You had CRX Maki and other, Anons like build it up. It became the second biggest DEX in the world. It was the first main DEX to go multi-chain. And had some innovated on a lot of like new concepts, like the onsen farms and so forth. Now, at some point, and I would say it kind of started, I would argue, with the departure of CRX Maki. CRX Maki stepped down in. If I have to put a number on it, I would say maybe like in the summer of 2021, maybe like May or July or something like that. And at the time, sushi was still at $16, right? And afterwards, there was kind of like a lack of leadership. Then, Joseph DeLong, the former CTO, started taking over as CEO, although he had a lot of anger spurts and people, like he just didn't get along with the community. And so then ultimately he quit and then became kind of like this leaderless project, where then there was a lot of ugliness with investors where, for example, like Arca got in fights with the community. They tried to appoint different people. There was crazy compensation packages. People were like, how the hell is this new potential CEO of sushi getting paid? The number was something egregious, like $3 to $6 million in comp over 2 years, where people said there's no way this is happening. And so it felt like an insider thing. Eventually, Arca quit. They at least according to Define, there was an article how they sold their stake in sushi. So that problem got filled. So, those internal strives filtered out. Checkbox 1. Checkbox 2, they recently elected their new head chef, which is like the name for CEO. And he would, compared to the old comp package, he said, you know what, my severance package, I forfeited. I don't want it. That same $250,000, $250,000 sushi, right about the same thing, will be put into the treasury instead, right? So internal strive, check. New leader, check. And then yesterday, Avi, he used to work at Block Tower, now works at Golden Tree Capital, big $50 billion plus private asset manager, who recently got into crypto, announced that the Golden Tree, and I think the sub fund is called Golden Chain, allocated $5.3 million into SushiSwap.
Wow.
And today, that is something to the tune of 2% of the whole sushi supply, because sushi's gone down a lot. And so the mix of having TradFi backers supporting, even at this point, old investors with like some issues with the community, that's settled. And the reason that matters is because so much in crypto is like voting based, right? And so if the community feels like one whale can steamroll votes, and the whales on the opposite side of the community, that makes the community want to quit, right? And then thirdly, like having a new head chef, like all of a sudden, like, hey, there is an actual path to redemption, so to say, for sushi, right? And there's also the Sushi 2.0 roadmap, where they really want to get into like cross-chain liquidity, cross-chain swaps, and so forth. So that's exciting. So now you have a project that has an existing brand in crypto space, is beloved by the community, has one of the most organic, like, I guess, token supply structures where people just acquired and farmed it on the open market, to now new direction, new leadership. So there's upside there. And so full disclosure, we're no golden tree, but Hartmann Capital 2 bought something to the tune of over $2 million worth of sushi. And so we're bullish on sushi for now. And so obviously we were slightly biased here, but this was a recent purchase as a result, because we think with this new direction and the already demolished, we're talking like 97% from all-time high drop. There is a lot of recovery potential.
Of course.
And so we'll be excited to kind of like track how this new leadership and with new investors will guide towards really becoming the number one cross-chain liquidity DEX. And most recently, they also started migrating, and this is a good lead into the next conversation, which is they recently deployed on Kava, which is a Cosmos-based chain. So now, in the past, they had been on like 9 different EVM chains, and now they've all started going to IBC. And so, that is something Uniswap has never done, and no other DEX has done. And so there's, I think, a lot of potential there. So
tell me about Atom 2.0. Tell me about what's going on there. What do you view about it? What do you think about it? And how do you express those views within the fund?
Yeah, so Cosmos is something we've always been really excited about. We've written a number of lengthy articles about that towards the end of last year, the beginning of this year. Something I love the most about Cosmos initially was just the caliber of talent it's been attracting. Most recently at the Messari Mainnet conference, we've had interviews with Greg from Akash, Tor from Secret. All these guys are building on Cosmos, right? Secret, Cosmos, Akash, Cosmos, DVPN, Cosmos, Juno, Evmos, Osmosis, Cosmos. The guys from Delphi migrated from Terra over to Cosmos, right? Mars on Cosmos. And so some of the biggest brain share has migrated to Cosmos. Now, the issue people had with the Atom token was that there's no value accrual, right? It just kind of exists. But a lot of that was being fixed with the Atom 2.0 roadmap. And so there's a couple things I'd like to read. So the Atom 2.0 white paper had something, it has a really beautiful introduction. So I'm just going to read it real quick and we can overlay it to where they said, the vision of the Cosmos network as laid out in 2016 has been realized. The creation of a secure software stack for building and connecting application-specific blockchains has catalyzed a thriving ecosystem of sovereign, interoperable communities and an increasingly dynamic inter-blockchain communication economy. The interchain, as originally imagined, is taking form. The Cosmos network is an association of autonomous communities connected economically and ideologically with the Cosmos Hub. It is a voluntary association of blockchains that subscribe to a philosophy of sovereign interoperability, localism, and pluralism. A network of networks that upholds the right for communities to maintain technological sovereignty and peacefully interoperate. This philosophy is grounded in a humility for the extraordinarily rich cultural diversity of human beings. It is a tacit recognition of the fundamental limits of our discretionary reason in organizing planetary sustainability while serving as a call to use technology as best we can to facilitate responsible self-governance. Cosmos offers a meta-political economy, one that recognizes the need for representation of different interests at different scales, and for an approach that can bridge the gap from local to global and back.
And so what does that all mean to you?
Well, what I love about that is, I know, because a lot of big words, but like it's really beautifully written, is, when you have, for example, just Ethereum, right? You try to do everything under one layer, right? And now you have one consensus mechanism that everybody has to abide by. What Cosmos kind of enables is that you can almost think as like with the US government, like you have the federal government, so to say, which is Cosmos, right? And right now, still, it is very simple, kind of like the way the federal government was meant to be, right? Simple. And now all the dApp chains, like, all the chains building on top of it, like a Secret and Osmosis and so forth, they're like the states. And they have their own rules. They have their own consensus mechanisms. They can have, their whole own setup. Some could be EVM, some could be Rust-based, some could be slower, faster, right? More secure, less secure. But something really interesting that now Cosmos 2.0 introduces is interchain security from the perspective that if you're an app chain, like if I start Hartmann Capital chain, Felix chain, whatever, not doing that, but if I did, right? In the past, I would need to have my own validators. So I would need to convince a ton of people to run validators and like stake their money in their tokens. And the problem is, let's say the project is only $10 million market cap, right? And let's say 20% of people stake. That means the network is only secured by $2 million worth of money, right? So to say. Now, if somebody wanted to attack it, they would only need $1 million worth of my token. They run half the validators and they could attack me. Now, what Atom 2.0 introduces is with interchain security is that you could, a project, a chain can say, we're running our own nodes, our own validators, which you can, or you run your validation and your security through Cosmos nodes, right? And so now all of a sudden, we don't need all that inflation. You don't need to have this heightened risk. Instead, the whole security comes from Cosmos, which will become bigger and bigger and bigger and bigger. And I'll share one more thing, and this is kind of like the core too, where how does Atom now start accruing value? There's two major changes that were being made. One is that in the past, the supply schedule was going towards infinity. Now they started capping it, where they have a lot more inflation for the next 36 months, but then it tapers off, where for the first 36 months, a lot of the new Cosmos being minted goes towards a Cosmos treasury that Cosmos token holders can decide over. And the goal is to use that Cosmos to, attract more and more dApp chains, reward them, incentivize building, and so forth. And then have Cosmos stakers actually be paid not by incentives, by printing money, but instead by the fees that are generated by all these dApp chains that need interchain security, right? And so it was actually the Define that wrote kind of like a really good summary here. They said the Atom 2.0 white paper adds an interchain scheduler, a secure block space market to avoid off-chain cartelization, like cartels, like the cartels, right? Where because that's what you've been having, where there's, let's say, 5 major node providers, and then if somebody wants to front run a trade, one of them can pretty much decide it, right?
Sure.
And so it's a market that avoids that cartelization and provide more options for chains seeking to optimize the use of block space. In a nutshell, the scheduler will sell the right to front run transaction, thereby accruing value to the protocol. So instead of pretty much letting individual validators front run and capture all that money, the Cosmos scheduler will pretty much allow people to say I'm willing to pay to front run. But now at least there's going back to MEV, maximal extractable value, that some of that extractable value now goes back to Atom stakers, right? It's collected by the scheduler and then kind of reinvested.
Which is a huge fix from Atom 1.0.
Right. And so they go on saying some of the revenue from the block space auctions will go to an interchain allocator, tasked with funding various initiatives to grow the Cosmos ecosystem. The white paper calls it a platform for delegated parties to grow and align Atom-based markets, facilitating multi-chain trust and coordination. So pretty much what that means is that there will be that will kind of grow the treasury, which will allow them. So you sell the block space, you make money. Now you can allocate it to new projects trying to build on Cosmos. You grow it even more. Now there's even more MEV to be captured, even more fees, and so it's a self-fulfilling, it's a self-supporting loop. But that is completely organic versus all the inflation that has been happening.
Yeah, that's awesome. That's well said. Now I know that we covered a lot there, and I really want to ask one more question on the liquid side that's very overarching here, because we talked about macro, and we talked about interest rates, and we talked about how that is affecting what's going on not only in the world but in the crypto markets. We talked about how you view news narratives and how you view special situations or momentum-based trading based upon what's happening on a day-to-day basis or a week-to-week basis. And finally, we talked about this theme of building through the bear market. We talked about the Ethereum merge, building through the bear market. We talked about Sushi, new head chef, building through the bear market. We talked about Atom 2.0, building through the bear market. It's been almost a year. When is this market going to catch a bid? And what's going to be the thing that allows it to do so?
It usually happens slowly. So if it's, because I've seen 2 of these bear markets before, 16, 17, and then again 19, 20. And so it usually starts slowly with you're gonna start having some big names enter the space that have never entered the space before, right? So in, I think 17, it was people like Thiel, right? AZXZ, right? Andreessen, right? They really just restructured AZXZ in recent years. They haven't always been crypto.
Right.
And then in 2019, 2020, you've had people like Paul Tudor Jones come out of the woodworks. You have people like Stan Druckenmiller come out of Michael Saylor. Michael Saylor never said a thing about Bitcoin until like pretty much the summer of 2020. It's not that like now he's like a pillar of the industry, but before that, he's a new entrance.
Yeah.
And so, those are kind of like these crumbs that kind of lead to the bull market when you start seeing these bigger names all of a sudden enter the space and make bold claims and take actual risk. Because that's the thing. In bull markets, everybody says like, oh, I'm a big believer in crypto. I'm a big believer in the metaverse because like it gives you headlines, it makes you sound cool. But in bear markets, saying these things is career risk, right? People say like, are you an idiot? The market is down 95%. Clearly this was a Ponzi. Clearly it was a scam. And so these people stepping out in the toughest time and saying, hey, I'm a supporter, I'm a believer.
Yeah.
That's very big. So I think that's one part to it. Is like having big supporters come out. Two is, and I wrote also an article about this in our newsletter. Let me see if I can find the name of it. But it might have been called like something along the super cycle, right? The digital asset super cycle, where I describe essentially how these cycles work, where I said, for 12 years, we had nearly perfect Fourier cycles resulting from the following chain of events. It all starts with curious innovators building cool tech.
Yeah.
They ship.
Yeah.
A paradigm shift occurs. 2010, non-sovereign internet money. 2014, Silk Road and adoption. 17, ICOs and smart contracts. 2020, DeFi and NFTs. And then investors enter the market. Price goes up. Speculators enter the market. Price goes parabolic. Hype enters the market. Price becomes grossly overvalued. Fundamentals cannot keep up with the price appreciation. And some investors, not the speculators, investors take profits. Price corrects. Speculators panic sell. Long leverage liquidates, creating lower lows. Team funding dries up. Speed of innovation slows. And some devs quit. And we've been seeing so many people quit in the industry, both from the dev side. You've had people like Andre Cronje, Daniel Sostheler, right, Frog Nation, all that stuff. Tribe, Rari, a lot of this stuff shut down, right? And then on the institutional side, you had this week alone, you've had the president of FTX US and several other people in the industry like step down. Michael Moore from Genesis Trading step down, right? That's bear market stuff. Next step, investors get disillusioned and sell, right? And then a long valley of death forms on the charts while innovators continue to build. Finally, they ship the next release, and we start all over again. And so, on this chain of things I wrote down in this article, and this is for those that want to look it up, it's April 1st, 2021. I think we're not approaching, I think we're approaching the end of the bear market, like from a downside perspective, but we're barely entering this valley of death, so to say. And valley of death sounds like very scary, but it's not. It's a valley. It's flat. It's not going down, right? And so when you look at most old crypto charts, usually you have this ugly sell-off. I think that part is behind us, and now we're entering the phase where some sell, some accumulate, and so that's where like the bottom, the accumulation phase, where the bottom forms. But it's not a V-shaped recovery. At least I don't think it's going to be V-shaped recovery. And so I think for blue chips, the way it could paint itself out is that, hey, maybe 8 months from now, ETH is back to 2.6. Now that's not horrible. That's a 2x gain, right? So anybody allocating now will literally double their money. Again, not a prediction, but that's just a realistic trajectory where, yes, that's a double, but it's not a bull market. Bull market, I think is once ETH breaks that 2.6, 2.7, 2.8 level, and then it can go pretty quick again, where it might take us 12 months to go from 13 to 26, but then it might only take 12 months to go from 26 to 5-figure ETH. And in the time frame, in that death valley of death, so to say, where things figure itself out, some altcoins will die, and which is why we're doing the whole long short approach, where we're saying there's many tokens that are grossly overvalued. And in that 12 months, while ETH maybe flattens, they will get VCs get unlocks, they sell. Team get unlocks, they sell. Team members quit. Development stops happening, right? And so filtering between where do these teams, where do these projects fall? Who's in the bottoms in, and who's still building and innovating? For example, with sushi, again, we haven't had sushi in the longest time, but seeing that, hey, they're doing new stuff again, new leadership, new ideas, that's great. Versus other projects where it's when's the last time you heard from them, right? And so that is kind of where I think we are. But still, you never know when the end of a bear market, the end of this valley of death, so to say, happens very quickly. Because I remember one of my biggest trading mistakes was, going too risk off at the end of Q1 of 2019.
And you failed to capture some upside.
Oh, well, yeah, but it was the speed of it that was kind of not scary. It was like, it just like, it put you like, it paused you where you're like, if you go to the charts and you look at April 1st of 2019, Bitcoin went from maybe like 3,900 to like 5,400 in a single candle, like in a single day. And it didn't stop there, right? And it's like, what did most people do? Most people, including myself, right, at the time, I thought, wait for the pullback and then you get more, right? So in April 1st.
And this was a time where there was not like no narratives happening.
No, it was dead. I mean,
this was what we thought was mid valley, and this happened very quickly.
Because people thought, we had this drop from 6,000 down to 3,000 in November, December of 2018. Yeah. And this was when Mike Novogratz, and not the running bus, like everybody else too, was calling like, this is the end of the consolidation. We're gonna get breakout. Breakout happened the wrong direction. We halved again, right? Yeah. People thought, okay, now it's gonna take years for this to come back. There was one night where I considered shutting down the fund because I'm like, this is gonna take like 2 years. I'm gonna, this is not worth it. Yeah. But obviously decided not to, which was smart. Yes. And then you start having this value form. It only lasts like 2 months, and then from one day to the next, Bitcoin goes from 4,000 to 5,200 in a single day, and then from April 1st until June, it went from 5,000 to 14,000. Wow. And so, in the span of April, May, June, in 3 months, it went from almost 3,000 to 14,000. Yeah. And that's what I mean. It's like, yes, you can wait and wait for everything to align, right? But I think at this point, we're down to the last bits of downside. You say, look, how much downside do we have? 20%, 30%? Let's be aggressive. Let's say 50%. But even if you have 50% downside left and the upside is 20x plus. Yeah. At this point, at the very minimum, I think dollar cost averaging is what makes sense. And I've been doing that with my own money. Even with my own foundation. Hartmann Foundation is now a proud holder of multiple Ethereum nodes because ultimately, might it go lower more? Sure, but I'm just zooming out for now. Where I'm saying, look, this is money I can't touch anyway. This is like for charity money pretty much. And I pretty much say that like over a 5-year time horizon, I'm probably within 20% of the bottom.
Yeah. Oh, absolutely.
And that's all I need.
Yeah, if you zoom out on a long-term scale, of course. That's awesome. That's a great answer. Thank you. So we've kind of discussed like what you think about and what you look at on the hedge fund side, and where you view public markets today and where you view the market actually totally and holistically. Mm-hmm. Now you also run a Metaverse fund. Yep. That Metaverse fund happens to be a VC fund, so you happen to play in both markets a little bit. I think we want to know, what are you seeing across private valuations, private markets that's different than the public side?
I mean, the Metaverse, it's pretty insane how vastly different these worlds are. Yeah. Like when you just make a basket of what the Metaverse is on the public side, you've got Axie Infinity, Sandbox, Decentraland, Illuvium, Somnium Spaces, a couple other names, but that's about it. And the unfortunate truth is that the vast majority of them, they're still worth billions of dollars, even though some of them have very minimal products, very minimal user bases. Axie Infinity used to have 800,000 players. Now they have like 20,000 players, and even that, some of that might be just farms. And
just to clarify here, to make it very clear, like, that is the crypto metaverse.
Correct.
And there's a different layer to this thing called the metaverse. There's a different side of it that has nothing to do with crypto.
It's really funny because I counted this when I talk to founders. Like, there's different camps. There's the Web3 metaverse, and those are the people that actually call it metaverse. Yeah. And then there's an entire industry called virtual reality, mixed reality, like VR, XR, AR. Yeah. They've been building for like decades, right? Yes. And they've actually been building kind of like the tech for the metaverse for a long, long time. And now they're like, well, now everybody calls it metaverse, right? And now these new guys try to tell us what to do.
Roblox.
Yeah. I mean, Roblox and like everything that's been happening in VR, right? Yeah. Roblox is still like mostly it's like desktop based, but like when you think of, even the things that like just like Oculus, right? The things that Oculus has done, PlayStation had VR before, but a lot of stuff is like, honestly, the vast majority of the VR space is still startups, right? And so this is something I'm realizing the more I'm allocating, that it's a very small space. It feels a lot like crypto in like 2016, 2017, where like everybody knows each other, and some of these founders, builders have been going at it for 6 years with the same startups, pushing and pushing. but they have pretty incredible both valuations and value propositions, where like we've come across, VR education companies that actually have, 30 plus schools onboarded, right, making revenue. We've come across, like one of our portfolio companies, DressX does, digital fashion with AR. And so like, they have a little bit of a foot in both camps, right? And then there's like, the Figmas of AR, VR, and they're trading at, maybe 1,000th of what Figma was sold for. And so I think there's a really rich space in VR AR that has been kind of like trodden down upon. And I think it's predominantly because there was VR hype in 2015, 2016. And I know this because like when I look at when most of these companies got funded, most of these companies got funded like 2015, 16, 17 because there was a VR hype. And then the VR hype died out. And so all these companies that started back then, they're still running, right? At least some of them are. But now the Metaverse trend came. And so now I see the same thing where Web3 VCs, they're funding these stupid 2D games and everybody thinks they're going to find the next Axie Infinity, but they're not really asking the question of like, let's zoom out a bit. What does the actual Metaverse look like 5 years out, 10 years out? And is it really just about incentivized gaming? No, I think that's a small piece. Like incentivization and gaming there are two different pieces to the puzzle and they just happen to connect them, right? And there's more. So to me, when we look at the Metaverse portfolio at this point, there's so much from VR education, VR music experiences, XR infrastructure tools, brain computer interfaces, digital fashion in AR, right? So it's whether it's music, fashion, education, and so forth. Like those are all areas that the Metaverse will touch, right? Versus just gaming and getting like play to earn. I think the whole idea of X to earn got very worn out very quickly.
Oh yeah.
Whether it's play to earn, move to earn, I've seen everything in pitches from live to earn, sleep to earn.
Sleep to earn is the big one.
Sleep to earn, right? I mean, and look, some of these things could be legit. Well, let's say, for example, if your insurance company pays you a small nominal amount for walking and being healthy, sure, that makes sense.
Yeah.
But other than your insurance company, probably nobody cares.
Sure.
Maybe your mom, right? But then mom has to like put that money in, right? And so it's like, it's a lot of program models. And so we're really excited about like actually going against the grain there and looking at sectors that the rest of Web3 Metaverse loves to ignore.
Yeah.
And what is interesting is that we found ourselves on more cap tables with like very well-known like Web2 VCs than Web3 VCs.
Yeah.
Even though like I come from the crypto world, I love crypto to death.
Yeah.
I believe in decentralization. I think the whole world should be decentralized. Like so much, but that's not the right starting point because ultimately the Metaverse it's about people.
Yeah.
It's about social environments. It's about bringing people together and so forth. And you start with such a bad beginning and framing when you're dependent on people needing to jump through 10,000 hoops to even be able to connect, right?
Absolutely.
Like otherwise you end up, I think, I don't know if this was satire or real. This is how bad the world has become. It could be real. Where I think Bored Ape tried to make a dating app. And then they shut the idea down because they realized it was only dudes. Right. And so, that's how ironic it is. And like, I don't doubt that was actually real because when I saw like videos of Ape Fest, it was pretty sad. Right. Yeah. And so if you want to make the Metaverse fun and actually mainstream, like you got to make it more accessible. Yeah. Right. And so in my eyes, the Metaverse should be on decentralized rails. Yeah. Yes. And we're beginning to see it. Right. So for example, if the two of the most important things that happened in the last 6 months that nobody's talking about, nobody's seen is that most of the social media giants have implemented NFT infrastructure.
Wow. Your
Twitter profile picture can be an NFT right now.
Yeah.
It goes from a circle to a hexagon. Yep. Right. You prove this your NFT. Instagram implement NFTs. I can now connect my Instagram with my MetaMask.
Wow. Not
Coinbase, private, centralized exchange. No, with my MetaMask.
Yeah.
And maybe 6 different, like I think Rainbow, Dapper, lots of other wallets, right? So you can actually connect Instagram, the centralized behemoth everybody loves to hate, right? Meta, to a decentralized wallet and prove ownership of your NFTs and then post your NFTs and it will have a little check mark next to it showing this is an actual digital collectible that this person actually owns.
Well, this is also foreshadowing too. It's foreshadowing of what this Metaverse 2.0, this Metaverse 3.0 is going to look like, right? Because this is a digitally native world that we are transitioning into and that we are entering. And that digitally native world is going to have to run on some kind of a digital economy.
Yeah, and it needs to be usable in the first place, right? Because until now, people have been collecting NFTs and they're catching dust in the MetaMask wallet, and who sees it, right? But just like the 2020 bull market got started by, for example, Square and PayPal saying like you can now buy Bitcoin on Square.
Yeah.
If we're now able to show our NFTs on Instagram, Twitter, where there's already billions of users cumulatively, right? That's an incredible gateway drug. It makes it so much more real.
Yeah.
And for some reason, it kind of happened in the background. Again, people don't seem to care that much. I didn't see it. But over the long time horizon, not even long time horizon, I think over the next 12 months, that will become one of the biggest things that makes people recognize this sector as real.
Yeah.
Right. And then, you take it a step further, companies like TrustX, one of our portfolio companies, if you go to the Instagram avatar store, like the Meta avatar store, you can dress your avatar in like maybe 3 or 4 different brands like Prada, Balenciaga, I forgot the third, TrustX.
Yeah.
Right. And so that's becoming, yes, there's bear market going on, but when I look at the metaverse, there's so much like day one infrastructure being built where like there's so much blue ocean where like, DressX can be the first at this, Red Pill can be the first at that, and all the other companies we've backed can like really innovate and still be the first, where it makes me, it's funny. I was at the X Lab event recently, and I talked to an investor, and he said like he's looking for the Lehman moment, he's looking for like a big crash. And when you actually draw the parallel to 2008, right? Yeah, 2008 was a horrible time to invest. I get it, right? And then a lot of people set out on the sidelines in 2009, 2010, 2011, right? The reality is most of the biggest companies in the world were founded in those years.
Yeah.
8, 9, 10, 11 includes names like Instagram, Uber, WhatsApp, I believe Snapchat, Airbnb. I mean, the entire kind of like Web 2 revolution that really captured us the last 10 years was all born in the, let's call it 12 to 36 months, both during and following the Great Recession.
Yeah.
And so
building through the bear market,
right? No, but on a serious note, right? Because people that set out, right, it takes time to build anyway. When was ever a better time to build than now, right? Why? Because first of all, people realize it's tough out there.
Yeah.
So they're going to show up with way more effort to work, right? They're going to they know hey, capital raising is not that easy. Sure. I got to use every single dollar the best way possible.
Absolutely.
Less waste, right? Even the new head of Sushi said that we're going to, one of the first items is she's like I want to run a forensic audit on our expenses and figure out, how can we cut this down, right? In the bull market, it's like Solana throwing a 3-day festival during Bitcoin Miami, right? With famous DJ back to back to back. And I'm like, it's bullshit, right? And Brock Pierce once said in the bear market, I remember in 2018, I spoke with him. He said, bull markets bear bullshit and bear markets bear fruits. Yeah. And there's still something to it, where that all the bullshit is kind of filtered out now. We saw it last week, and this is probably a good transition too, where we were at Messari Mainnet, and it's just a different vibe. Yeah. Right, where it's fewer people, the after parties are a lot less excessive. No world famous DJ performed this time instead of 5 competing during the same night. Yeah. It wasn't crazy open bars, a lot of drink tickets. Yeah. And so it's as it's kind of nice and fun going back to the simplicity and actually focusing on tech, focusing on the founders. And so I'm not slowing down on deployment either personally or with the funds, because ultimately I think the startups you can back today, you're getting a fraction of the valuation.
Of course.
You got 12 months ago. You're getting twice the effort and alignment. Mm-hmm. And you have, let's say a 90% chance, 90% less clowns out there. Yeah. Because in bull markets, there's a lot of opportunities that come out that maybe they're good salesmen and they'll try to selling their vision. It's all vaporware. They don't actually care about the technology. Right now, everybody understands building in crypto and metaverse will probably lose you money in the near term. Yeah. So the only people doing it are the ones that actually care. They actually want to be here. They actually want to innovate something. Yeah. Because the people that just wanted to launch, an NFT scam and make a quick $2 million, they realize that's not around anymore.
No.
Right. And so it's. I think it's very. There's a word for it, fruitful ground, so to say, where. Yeah. The chance of a unicorn sprouting out is actually tremendously higher. Yes. Because it's going to take 5 years anyway, and so then 5 years from now, the people that are born in the trenches they might actually pull it off.
Yeah. No, that's awesome. You answered my question right into in there. So, now is the time, and what you're seeing across private markets is now is the time to identify those unicorns and to see those. And I know one of the things that I wanted to ask you is, because now you've been in the business of identifying unicorns for the past 10 months now. Mm-hmm. almost a year, but I guess
with the VC fund,
with the VC fund. So, like, your perspective of starting this VC fund to where it is today, 1 year later, you know, you kind of touched upon it a little bit. Like, how has that changed? Like, what's happened in the last year that you see?
Yeah, I think a lot of this, like, funny enough, we are still like 95% aligned to like that. We had a slide in our initial deck where we said, like, you know, the type of companies we're looking for, and how those things are checked off. Now we said, like, we want digital fashion, we found TrustX, we want a frame computer interface company. We're like signing term sheet right now. I can't say a name, but a really cool company. It's kind of a check, you know. Virtual music, we got Red Pill, right? So there's a few, but I think the biggest change is more so in kind of like making our own trail versus following what's consensus, right?
Wow.
Because it's, when you look at what Web3 VCs see as the metaverse, for the most part, I just couldn't disagree more, right? There's a lot of VCs out there that walk around saying that Steppen was a big success, that say that Axie was a big success. Wow. And I wholeheartedly say that I think both of those were Ponzi's, and for the most part, long-term, nobody will care about them. Like, I don't think that they will make meaningful history because they weren't sustainable, right? Like, who cares if you were able to get 800,000 users because you paid them to in a bull market, right? Will they still play your game when, you know, so to say, the incentives stop, right? And if they don't, then you never build a good game in the first place, right? You just raise a lot of VC capital and pay people to play, right? I mean, Web2 history is littered with that, where like companies like build products that were unsustainable and they failed and never came back, right? Like MoviePass, for example. You pay $10 a month, you can watch as many movies in the movie theater as possible. Sounds like an awesome idea, and they did become, I think, pretty big by valuation at some point, but then ultimately collapsed because it just wasn't a working business model. And so, you know, it instead of sticking with what my compadres in the Web3 world are doing, and everybody's just backing more and more Web3 games, they're super hardcore on their crypto mandate, where it's like, if it doesn't have a token, I don't want it. Well, I say, look, in my perspective, long term, everything will have a token at some point anyway, because I think the whole world will get tokenized. But that's secondary. That's a medium. It's not the business. It's not the product. Like, the product is the product. Token or equity or NFT, that's the medium, right? So I always say, like, I'm thematically focused. Metaverse is what we focus on. I'm medium agnostic. I don't care if it's a token or equity. Whatever expresses the idea the best, whatever will create the best network effects and also the least amount of headaches. Because there's a lot of times where I say, look, if you have a $50 million market cap or valuation product, you have no business launching a token yet. Why? Because now you have to worry about market makers. Now you have to worry about regulatory. Now you have to worry about like so many different things and extra costs, when really every single minute of that time should be spent on your product, right? So please launch a token, but let's do it, you know, when you have strong footing and you can take care of those things. Like, make sure that you have good liquidity, make sure that you have, you know, all the boxes checked with regulators and so forth. And so, you know, we found ourselves backing a lot more in the, let's just call it XR space than just the pure Web3 gaming space, because I think that's what the actual metaverse will be built upon. Because otherwise, the problem with a lot of the tokens that have been launched is that because now they have a live ticker tape, they need to constantly release news events so that the price stays up, and becomes this endless loop of distraction where instead of, like, you know, building the product that you need to build, you say, well, the price has been going down for the last 3 months. We need some good buzz, right, to make the token go up again, even worse in the bear market, right? And so the team spends all their time pretty much playing PR instead of actually building. And the XR space, meaning, you know, mixed reality, VR, AR, and so forth, which again is a huge part of the metaverse, you know, the average valuation I come across is maybe $20 million. And we're talking 20 million post-product, sometimes post-revenue. I've even once found post-profit, right? And so that is promising to me. And when I look at all the numbers, you know, for example, you know, 2018, 1 million Oculus headsets were sold, 19, 2 million, 2020, 4, 2021, 8. It's been doubling year over year for the last 4 years. And that trend isn't slowing. We've got Apple coming out with a headset, Lenovo coming out with a headset, Sony PlayStation VR 2, Pico from ByteDance.
And something I always say is, like, the biggest catalyst for VR will, and this will be global, when you can connect your iPhone to your VR headset, because Apple has their own VR headset, and that's coming. That's a year out, you know. And so this is going to be one of the most major catalysts for VR as another investment medium. And just like something that you always talk about too, like a chicken and the egg thing, you know. And with more people adopting VR, there's going to be more use cases for VR and better products on VR.
Yeah, and especially like beyond the VR, like what I'm really excited about is like Apple XR glasses, meaning you can do both augmented reality and virtual reality that are from a form factor. You know, right now an Oculus headset is might be like this big, you know, this much big on your head, and then you put it in a bag. It's this kind of this behemoth.
Yeah.
If instead it's like slimmed down, well, let's say from a size perspective, let's say 2x, a Ray-Ban or something like that, where it's like maybe it's a little bit thicker, a little bit bigger frame. That's fine and all, right? But still, it's something that you could wear without looking like a clown, like the Google glasses were. Yeah. And if that allows you to both, like, VR, meaning completely shutter the outside world, or keep it transparent, but then like overlay something where maybe, we can have a conversation right now and I can still, I know that's awful, but like I see my text messages and like, I can read them, or I can read an article. Maybe I sit on the train somewhere instead of like, because I don't want to completely shut off, right? Yeah. I could sit on the train and read an article while still maintaining a view of my surroundings.
Yeah.
And so it will be big. And now we're also looking at things like, AR sports. Like there's just a massive blue ocean.
Yeah, so I was going to ask about that. You still have another 2 years of investment window for this fund. And so, of course, like we've touched about how much like your view has shifted already in 1 year for the Metaverse fund and investing. What do you think the next 2 years hold? I mean, I know that you were looking at this project where you can control objects in VR only using your mind. You've been looking at things where, you can build organically, or you talked about education already as a medium for the Metaverse. But what do you think the next 2 years hold for investing in the Metaverse for you?
I mean, pretty much like, again, it feels like 2017 crypto where everything is a blue ocean. Like, again, you can look at any sector like, okay, well, let's bring fashion to AR, right? Nobody's won it yet, but, Tresic's the leader. VR education, again, nobody's won it yet, but, one of the companies we're looking at is a clear leader. What about, like a WordPress or Figma for creating virtual experience? Again, no clear market leader yet, but there's like two companies that are kind of like going head to head.
Of course.
And so I think, for us, the first big step is that I want to back the champions of every single subsector within the Metaverse. Wow. And so that can range from, again, like fashion, music, entertainment, gaming, education, maybe even like regular, like what is it called? Like training, how do you call it? Like employee training, professional training, and lots of other things.
Which is also, I mean, just to pinpoint that for a second, that's another really big medium of VR, because what we're seeing now is, and it's already being used by the U.S. military. The U.S. military can train in VR before going and actually doing things in real life. Right. And heart surgeons, instead of practicing their heart surgery on a live patient, they can practice within VRs. That's another huge niche of Metaverse, VR, et cetera. But you haven't even explored that one yet.
Yeah. And so to me, all these things I just mentioned, I think those are year 1 and year 1.5 kind of place where that's very near term, right? So for example, VR education, you got some traction. Digital fashion, you got some traction. Like that's kind of like year 1 on year 1.5. I think after that, we're going from a physical world into the Metaverse, right? So like now we took the first step. Let's say kids are taking classes in VR, right? Now what's the next step, right? Like, so now that they're already spending time in VR, right? Maybe things like making avatars or characters like cross reality interoperable, right? That's something really interesting that I'm looking towards, but it's too early for it yet, right? Sure. So for example, that I can take my avatar with all its NFTs, items, and characteristics and so forth from one virtual world to another, right? So that you actually have this continuity, this consistency between worlds. Yeah. That's something that, for example, might be more like a year 2 and year 3. Going more into immersion tech, right? Things like the brain computer interface. Those might be, also again more year 2 and year 3. I think there's a lot of like actual Metaverse tech, when we spend all this time in VR and now we integrate the crypto aspect, where you say, okay, how can we, I'm sure there's room for like a world creation protocol where pretty much you can spin up a virtual world, you have flush economies, you can generate its own tokens, and so like a token for its own Metaverse economy. Because at the end of the day, I also look at Metaverses almost like layer ones in a way, where every world, just like every layer 1, will have its own rules, its own standards, and so forth. And so creating infrastructure, I think creating infrastructure for open worlds is also really big. So for example, like how can an open world govern itself?
Yeah.
Right. And so that's when I will get really interested in finding ways to integrate DeFi into metaverses, DAOs into metaverses, NFT infrastructure from metaverses that just allowed it to be launched more at scale.
Yeah.
And I think year 2 to 3 after the after the NFT market has finally fizzled out of its bear market will also be really interesting. So, we cannot invest up to like 20% to NFTs. We're definitely not there yet. I think there's a lot more pain to come for NFTs.
Yeah.
But that is also when I think backing the next generation of IP for the metaverse can actually be pretty massive.
Yeah.
Where, I don't know who's going to be the winner. It might be a Bored Ape, it might be CryptoPunk. Those could fade in relevancy a little bit, or maybe completely.
Yeah.
I don't think completely. I think they'll be here for a long time because they've been kind of like OGs.
Yeah.
But there will also be new upstarts, right?
Yeah.
It makes me, if we make this comparison where we say, hey, ICO's 2017 is very similar to NFTs 2020, 2021, right?
Yeah.
ICOs died out, but there was a few players that survived that kept building and building and building.
Yeah.
And so, for example, remember, Synthetics was trading at like a 9 million FDV back in September of 2019. They started having stake in one of the first that had like incentives and whatnot. And at the peak, it was, I believe, like a couple billion, like 2 billion, 3 billion or so.
Yeah.
And that's a ridiculous return for the fact that it was a public market, right? It's not like you got into like some closed door, closed scenes pre-seed round. No, this is like you could just buy SNX on KuCoin.
Yeah.
And so something similar I think is going to play out with NFTs. Again, we're not there yet, but there will be some games and open worlds whose NFTs you can buy for like stupidly low prices, right? Maybe, again, I'm not a huge fan of virtual land, but maybe some virtual land will have value. You can maybe buy it for like $10, $5. I mean, same thing happened in the last cycle, whether it was like buying dirt cheap ENS, the Ethereum name servers, or buying dirt cheap, land parcels in Decentraland, right? These opportunities will reoccur. But I think that will be year 2 or 3, and that's something we'll do too. So everything from, again, capturing all the blue oceans in VR, AR, XR, to then migrating to really crypto tech, decentralizing these worlds that now already exist that have users, and then the final piece, dominating the IP in the metaverse.
I love that. That's awesome. And so that is a great cover of kind of both funds and where you see the market and both funds and how they relate to it and what lays ahead for the future. I now kind of want to tailor a few final questions here and the last piece of a segment to our LPs, our prospective investors, our friends of Hartmann Capital. I want you to talk to them. I want you to tell them what has been going on recently with Hartmann Capital. What have we been up to? What have we been doing? How was the month of September? You talked about Mainnet for a little bit. You talked about the XLab event for a little bit, but tell us what's going on right now? What's going on with Hartmann Capital right now?
Spent the whole summer in Ibiza and Mykonos.
No.
Just kidding. I get gray hair, so you don't have to.
No, we didn't.
It's been a busy summer. Pretty much no days off, which has bared fruits. We everything from like growing the team, the Hartmann Capital 2.0 roadmap, to bringing on some of our most nameful LPs.
Yeah.
And the last few weeks in particular, we're really busy. Where first of all, you and I spent 2 weeks in New York initially at SALT, DAS, Multicoin Summit, and so forth. Yeah. Where it was all about, Multicoin Summit was interesting for like learning a little bit about how they view this next era, and that we actually had a lot of alignment from the perspective that Kyle also sees that the next era of crypto will really be consumer-facing crypto, right? So having decentralized social networks, decentralized entertainment, gaming, and so forth.
Yeah.
But also talking to tons of allocators that week, at these various conferences, and just getting a taste for where they're feeling. And our conversation with LPs and prospects during Q2 was, crazy cold. Everybody was like, let's see when the dust settles, let's see what happens. 3 arrows, who knows what the contagion's like.
Sure.
And now that months have passed, I think people are like, okay, the people that were swimming naked, they're dead, right? And the ones that weren't, and you now know who had proper risk management. You now know who can handle stress, who can handle tough situations. And so I've been seeing allocators definitely warm up towards crypto and actually start getting pretty excited about the valuations that are around.
Yeah.
Now, what was your perspective on that week?
Oh no, I agree. It was also wonderful to hear how the Multicoin team views the market currently, and then what'll happen. Well, actually, one of the biggest verticals that I took away is they are big believers of where the devs go in the crypto space, therefore there will be the growth. And just like you mentioned, user-generated content is another big thing. So having now more users in the space, more devs, more growth, but then having a little bit of an incentive or a give back to the ecosystem as a whole by just continuing to generate. Thought that was really interesting. But no, I agree. And even with Mainnet the week after, it was kind of a little bit of a different vibe. No? What did you think? What did you think about Mainnet?
Yeah. So Mainnet was good. So first of all, again, we flew the whole team out, right? It was our second team retreat. So even, Daniel from Dubai, JP from Atlanta, Jonas from Germany. So we brought everybody back together, which was a great time, like just seeing the team, especially. I think that's super important in bear markets because, it's challenging enough, it's intense enough. So it's nice having some time with the team. But in terms of the conference itself, I thought Mainnet last year was already a really high caliber conference. It had like all the founders and so forth. At least for me, like this year's Mainnet didn't live up to last year's Mainnet.
Sure.
But still, I think it was a big improvement over, let's call it the Bitcoin Miamis. So many of the conferences that really live up hype, which is like excitement and like, big. Bitcoin Miami pretty much just has like this huge, almost like festival style crowds with like rides and shit, and it's like
it's Miami too. So
it's Miami. But then at least with Mainnet, it seemed very bare bones. It's like this is just about the tech, this is about the products, the founders, and so forth.
Yes.
Which you could actually walk down the hallways and you'd predominantly run into people actually building an industry.
Oh yeah.
And not just retail traders and retail investors and like tourists stumbling around looking to like learn a little bit about crypto here and there. Which again, they're not to be excluded, but it's refreshing, at least as someone that's deep in the industry, to be at a little bit more appropriate conference where you actually get a value out of it as well.
Yeah, no, I agree. I love that. Another thing to mention as well too, the team has really kind of solidified during this time, and being able to bring like what did it mean to you to be able to bring everybody to New York and to bring then everybody to Miami and kind of do some more team-based building things, but also spend time, like we spent time at Ellis Island, we spent time on Broadway in New York together, we spent time back here in Miami at the XLab event. What did that mean to you?
I think one of the things that has been most important to me, most rewarding to me also is the longevity of our team members. And so we haven't had really many changes in recent months where, we were a young team, a young firm and so forth. And so, we have a team of 6 and we maybe have like an equal amount of alumni as well. And we've created relationships with them. And, some of our alumni now work at places that, shout out Rahul, works at Republic and a couple other places, and but in the past, sometimes, analysts, because crypto was so hot and fast, people would last at a fund like 4 months, they get burned out and like, I need a break or whatever, all the guys now have been here for a long time, right? Like JP's been here for like 2.5 years. Daniel has been here for like 2+ years, right? Even Jonas has worked with me in various capacities and like for 1.5 years. And so like now it's no longer like now we're like I think a very tight-knit team where we all know each other fairly deeply. We've done several team retreats. Clearly we've been here in bull markets, bear markets, so people are in it for the tech. We still care, we're still like deep into it. I think we're as motivated as ever. And events like XLab, I think solidifies that further, where you actually get to physically see some of your work, right? It's like at XLab we saw,
for those that don't know, can you give us an overview of what the XLab event was and everything?
So with Hartmann Ventures, one of our companies we backed is XLab, and they have a game called Vail, which currently is the 6th most played game on Steam VR. And so they're crushing it in the charts, lots of fans, huge community. Actual live game, right? Unlike a lot of the Web3 gaming out there. So like actual live game and tons of players. And so what they did in Miami, they had hosts, when they went to public beta, they said, let's not just like launch the game and that's it. No, let's make a tournament, right? And so they had, I might be wrong, it might be like 32 teams, 36 teams, something to that tune, that all competed for a grand prize about $35,000. And so for 3 months or so, this tournament was happening. And then last week, it culminated in Miami with the finale where 4 teams flew in and actually competed live on stage, like fighting in VR, which was super, like the production value was super high. I'm sure we can blend it over here with like, live commentators and prize money, light shows.
The Miami Vail Major,
The Miami Vail Major with like even halftime shows with like DJs and performers. And so it's super cool seeing like, all portfolio companies go from when I met them, still like in unreleased pre-alpha.
In a startup.
startups,
absolute startup mode to
Yeah.
what looked like an ESPN esports fully done studio presentation.
Yeah. Yeah, and just like the whole, the whole environment, like everything was like just so well done, and also it brought together a lot of other VR companies, right? So you had a whole room full of other VR companies, including Red Pill VR, another portfolio company of ours, and so they've really established themselves as one of the leaders in VR
Absolutely.
that is bringing together community, and that's so important because when I think of the crypto days, it's that inner circle of crypto startups that became kind of like the leader in all their segments, right? Yes. So if we can also, co-own, a lot of the VR startups that make up that nucleus of what VR tech revolution looks like, that there's just so much upside there. And so I was really proud of the XLab team, really amazing production. And I think it was also, again, like I said, like really fulfilling seeing in person, like, hey, we're not just backing white papers here, pitch decks. Like it is real tech touching real people, thousands of people watching real time as this happens, right? And that's something that makes you build through a bear market because, when you see that actual progress, the macro matters a lot less because you say, like, look, here's the thing. And I tell this my macro analyst sometimes, Jonas loves macro. And I always tell him, I was like, look, macro to some degree, and I don't want to be offensive to anybody who loves macro, but like, it's a little bit of like astrology for men where ultimately, like, in Naval Ravikant said the same thing. He made a podcast once where he said, like, don't focus on macro, focus on micro. Because the thing is, you have no control over macro unless your name is Jerome Powell. Like you can study everything, but like he might wake up tomorrow and lower interest rates, or he might wake up tomorrow and raise interest rates, right? We've seen the most extreme scenarios happen in the last 24 months.
Yes.
And so you can watch 100 YouTube videos, you can read 20 white papers. It probably still won't change your impact on macro. But the one thing you do have control over is the micro, right? So for example, in the startup space, if you're looking at a pre-seed company, a seed stage company, right? The fate of that company still lies, let's call it 95% in the hands of the founders and 5% in the hands of Jerome Powell. Now, if we talk about a big tech company, let's say an Apple, for example, now it might actually lie 70% in the hands of Jerome Powell and 30% in the hands of the team behind it. But the smaller you are, the more, the less unknown variables and the more variables are actually in your control. Are you building a product? Are you making sales? Are you raising money, right? And so that's why I think it's an ideal time to focus on early stage, even compared to growth rounds, because even growth rounds, again, that's where there's more variables, where like how many players are there that can fund, let's say, a 30 million raise, right? And again, because even those funds depend on their LPs who might be impacted by the economy. But if all the company needs that a high quality company with a great product and great team, if they need $1 million, $2 million to like keep running, they will always find $1 million or $2 million. I don't care how the economy is, because like 1 or 2 million is nothing in the grand scheme of things.
I love that. And to just bring it back in one final time to everything, to even with that answer, you touched upon a little bit of macro, a little bit of the public side, a little bit of the private side, a little bit of the team. I guess, like, what last words would you like to leave with everyone for what we're doing in the next few weeks, what we're doing in Q4 here, what we're doing at the start of the new year?
Well, first I would say, for me, like in the last few years, Q4 has always been my strongest quarter, because like I'm somewhere like, I'm like, you only got 3 months left. These were your annual goals. Let's push them, right? Let's double them, right? And go even harder. Plus, I'm a competitive animal where, like, if I see my competition kind of slow down, like, I want to double up my speed. So that's number one. And so I think, I even talked with the venture team, and so we're probably going to like do twice the amount of deals we did before. And we've already found like 5 really interesting companies that we made, out of, like, let's say a pile of 500, we've now narrowed it down to like 5 or so that might be for Q4. And so that's something I'm really excited about. And beyond that, I would say my only other final words would be, see you next week.
Thank you. Yeah, absolutely. This was awesome. Thanks,
and with
Felix.
that, we'll do that more often now. So I hope you guys enjoyed this format. If you have any feedback for us, and how we can do this format better, something you would learn more about, or if you have questions you want us to cover, either next week or in 2 weeks, this might be weekly, it might be bi-weekly. We're experimenting with the format. But, as long as it's valuable to you, we'll keep iterating. So
this is good.
Let's do it.
Awesome.
Appreciate you.